Howdy, folks, and welcome to the Daily Coin. And I certainly appreciate everybody tuning in today. And we've got Mr. Craig Hemke, the founder of TFMetalsReport.com, on the line today. How you doing, Craig?
Rory, it's always a pleasure.
Well, I just love talking to you, Craig. And today is one of those days.
First day of the rest of your life, right?
Well, somebody's life, I can assure you of that. Somebody's attention has been grabbed thoroughly, and probably a lot of somebody's, with the situation going on with the Swiss franc being unpegged from the euro and creating all the turmoil. And you wrote that article just yesterday titled "Complete Collapse." And it seems like that you were pretty well spot on with that report. And why don't you catch us up with what's going on with the franc today, Craig, and just fill us in what your thoughts are.
Well, it's a multifaceted thing, Rory, like a diamond sparkling in the sun, I guess. Just one of those facets, but potentially the most important from the long term, is I see this as a Keynesian capitulation, if you will, in that up until yesterday, every major central bank in the world was working in conjunction, working together to try to promote this Keynesian central planning dream or try to keep it alive. Everybody was in the same boat. Everybody was rowing the same direction. When the Swiss National Bank pegged to the euro, they did so, I guess they claim for some of their own selfish reasons, but also mainly just to support the global theme that we're all in this together. By depegging today, this is the first move by a central bank to say, no, we're getting off this train. We're going to start looking out for number one. And that may be the ultimate long-term, I guess, impact of this decision today. Because what will probably be next will be the Germans, excuse me, who we've all been waiting really since 2010 or 11 to really upset the apple cart by perhaps going as far as leaving the European Union. But at least, if anything, they're so frustrated by being the ones that are having to foot the bill for all of the lousy, we used to call them the pigs, right?
Yep.
And you could see this coming a mile away, actually, now, with the benefit of hindsight. There was this decision back in December 18th or something like that, where the Swiss National Bank announced that they were moving to a negative interest rate policy. And that caught everybody by surprise. And they said, whoa, what is this about? And if you dug into it, the negative interest rate policy wasn't due to go into effect that day. It was due to go into effect on January the 22nd. And everybody sat back and scratched their heads and thought, well, what do they need 5 or 6 weeks for? Well, all you got to do is kind of look forward in the calendar, and you see that the next ECB meeting, the one where everybody's expecting them to announce their own QE, is scheduled for, wait for it, January 22nd. So they've been taking these measures to move independently and move away from the ECB and the euro and everything else. I mean, you could, again, like I said, in hindsight, you could see this coming. And like I said, the main thing that I take away from this is it is the first crack in the facade that all these banks are in it together. And this could really begin to accelerate in 2015. And all of it ultimately is a very positive thing for the precious metals.
Well, and speaking of which, how do you think that this ties into the gold initiative that the Swiss that it failed, but 22% of the country said, we want gold. We want gold to back our currency, and we want gold we want our gold to come home. How do you see that playing out?
Isn't it funny that Thomas Jordan, the head of the Swiss National Bank, even politicked against the Swiss Gold Initiative, which they weren't supposed to do, but he was out there speaking against it. And one of the reasons he gave for one of the rationale for voting against the Swiss Gold Initiative was going to make maintaining that peg almost impossible. And here we are. I mean, here we are 2 months later, you're like, what? It is really remarkable. I would contend that the bigger reason why they fought against it is what I wrote about in May of last year and again in August of last year, and that the Swiss gold is gone. Yes. I mean, they may claim that they still hold 1,000 tons, but I would dare them to actually show it to us and show it to us with clear title. I mean, they may have some paper claims, that they hold at the biz or something saying, oh, yeah, we've got 700 tons there. Yeah, sure. Just like I've got 700 tons there. And so I think that what they really battled against was the whole idea that they had to repatriate this unallocated gold, this rehypothecated and leased out gold. That's all part of that kind of daisy chain of leases that the bullion banks attempt to manage. And I think that's why they really fought against it. I would be very surprised, though, at least in the short term, I should say, I'd be very surprised if this led to some reestablishment of a gold standard in Switzerland. I mean, last thing the Keynesians there are going to want is more demand for the franc.
Right.
And that's why they pegged the euro in the first place 3.5 years ago. But I think, again, getting back to it, I think what they're ultimately showing and what the big takeaway is the Swiss said, nah, no more. We're not playing this game. We're looking out for number one. And as more central banks begin to do that, this whole central planning facade is going to fissure and break.
I think that it already is. And I couldn't agree more that it's a really big deal for what's happened. I mean, with these guys stepping away like that. And I wanted to go back to another article that you had written just about 3 or 4 days ago. Is on January the 12th, and that was how they did it.
Yeah,
and this ties into it also. And the video that you put into that article was from the December of 2013.
Right.
And
right.
Ken Hoffman, who is prostitute at the upper echelons of prostitutes. He is with Bloomberg, and he would not, in my opinion, he would never say anything that he wasn't allowed to say. And for him to come out and clearly state there was 812 and a half tons is the math that I came up with. And I may be wrong with that.
No, it sounds about right.
26 million ounces is what he said is gone from the vaults of Switzerland, or from
London.
Sorry, from London. I'm sorry,
Rory. And Rory, that was over a year ago.
Yes.
Yeah.
So how much more? How much more can be left?
Yeah. Well, and to tie that in with today's news and this, I guess, breaking apart of the cohesiveness of global central bank policy, this may very well extend to the cohesiveness of gold suppression and manipulation too, where the banks that do own gold just say, "Screw this." I mean, you're already seeing, what is it, the Dutch and the Austrians and the Germans all putting in, repatriating gold.
Yep.
I mean, there's 3 countries already looking out for number one. Them all working together through the BIS, the Bank of International Settlements, to this ongoing management and suppression of the gold price, that may begin to fissure and crack as well. What has taken place in the article that you referenced and the interview with this Ken Hoffman guy that I don't know how many times I've posted in the last 12 months. Ken Hoffman is a senior guy at Bloomberg. He's a senior metals and mines analyst or something like that. I mean, this guy's connected. He knows all the people in London. And he went on Bloomberg television in December of 2013 and just matter of fact said, what's most interesting to me is what happened to all the gold. When you used to walk into I'm kind of paraphrasing what he said, but I guess I've seen it so many times now, I can just directly quote him. He said he used to be able to walk into the vaults of London and they'd be stacked to the rafters with gold bars, and the gold would trade from me to you to somebody else. And now if you walk in, the vaults are virtually empty, 26 million ounces of it gone. And all that's been documented by all kinds of smart people. How the gold flows from London to Switzerland, where it's reassayed and recast into kilo bars and then shipped off. And now even the COMEX is going to start physically settling contracts, Hong Kong contracts based in kilo bars. I mean, that's the direction we're headed because there are no London bars left.
Yeah.
And so to that end, because there is no London gold left, a considerable effort has been made all through 2014 to cap price as aggressively as they can, because here in the West, we only buy things. We only think things have value if they're going up in price. Not so much in the East. I mean, they know gold has value. They know it's been money for millennia. But here in the West, no, that gold's going down. I don't want nothing to do with that. which is why it was so important that they capped price below 1,200 the last 2 weeks of the year so that they could run column after column on New Year's Day saying how gold had a negative return again for 2014. So this movement has been underway all through 2014 to maintain a downtrend, to maintain price below an obviously enforced trend line that we've been following at TFMetals Report all through the year. We broke through that trend line again here about a week or so ago and are just drawing clear now today. And we're reaching again another critical point where either the banks are going to attack and try to drive it back down to maintain this downtrend and thus suppress sentiment and thus suppress physical demand, or they just begin to give up. And again, tying back in today's announcement, they may just begin to give up, because if the gold's not there, I mean, they can't continue to press it back down. And an announcement like today is only going to increase, finally, Western European demand for physical gold. It's going to exacerbate the problem. And so we may very well be at the end game of that. I'm 100% convinced we saw a physical floor put under the paper gold price back in early December. And this year now is going to be a year of recovery and resumption of the bull market.
Well, and gold is currently up right now as we speak, $30.50. It's setting comfortably at 1259.60.
And oh my gosh, Rory, it's just so sad. They say that these markets are a reflection of price and demand, and it's just nonsense. It's a handful of algorithms trading against each other, some spec hedge funds versus the bullion banks. 3 days in a row, I just was printing off these charts for inclusion in my podcast this afternoon. 3 days in a row, the price of gold has been hit at right almost exactly 2:00 Eastern on the Globex session for about the same amount, too, $4 or $5. 3 days in a row. We already know that they like to attack every morning at 2 a.m. New York time when the London session first gets going. I think they've now reset that algo to run twice a day at 2 o'clock rather than once. It's incredible. You can also see this in the ramp job every day this week in the S&P futures. As soon as we get to about 1:30, 2 o'clock Eastern, doesn't matter what the news is. It doesn't matter how big the S&P's been down. It has turned and ramped into the close every single day. I just was printing off that chart as well. Yep. Now we're headed back down here late in the session again on Thursday, but every effort is being made to maintain these illusions through this electronic trading. They can keep it up, I suppose, for a little while longer, but not indefinitely, that's for sure.
Well, and 2015 seems to be, this year already seems to be, there seems to be a lot of smoke signals going on that say you need to pull your boots up a little tighter. And
yes, and you mentioned that article I wrote and made public a couple of days ago called "Complete Collapse." We're seeing now, just utter collapses in physical commodities, whether everybody knows about crude and people are waking up to the disaster of copper, but even things like iron ore and aluminum, all the way to soybeans and corn. It just is a laundry list of commodities that have just been destroyed because beginning in 2012, 2013, the Bank of Japan started overtly, aggressively printing yen with Abenomics. And now, as of a month ago, it became clear to everybody that the ECB was going to start QE, and now the euro's down 8 or 9% in a month. And with all that rallying, that's forcing the dollar index up, and all of these speculative trades against dollar or buying dollar-based assets, shorting the dollar basically, and going along these other currencies are all being unwound. And it's having disastrous implications worldwide. But one thing that you can't even measure yet, that is just only now coming over the horizon, are all of the derivatives, whether they're linked to the North Dakota Bakken shale oil energy companies and their high yield debt that's all going to be worthless, or whether they're just simply commodity derivatives. There's $4 trillion of commodity derivatives on the U.S. bank books. They think, well, no, those are just hedges. Well, yeah, fine. But for everybody's hedge, there's somebody on the other side of that has a counterparty risk that's a speculation. This whole thing, you mentioned 2015 being a big year, a consequential year, no doubt about it. it is utterly unpredictable what this year holds. And but I think one thing we can predict, though, is none of it's very good.
That's where I was going. Is, I mean, it just looks like, I was looking at those charts and that you had posted with that article, and if you just look at aluminum over the
Yeah.
last 5 years, I mean, where the price of aluminum is today is, if you go back 5 years, that 5 year chart doesn't go low enough to show where the support is.
Yeah.
I
And
mean,
also it goes against this theme that is put out by all of the central bankers and their shills in the media that, oh, everything's great. Man, everything's fabulous. I mean, every economy is just growing like mad because they got to keep that light going because their whole system is built upon growth and inflation. And as that it becomes apparent that that's all fallen apart, the system begins to collapse, and that's the kind of complete collapse that I was referencing.
yeah, I mean, and that's kind of what it feels like, and I wasn't expecting things to really start unraveling until next month. When for the American consumer, as far as the credit cards becoming due from Christmas and the holiday season, because all of those bills are getting ready to come in, and that's when I was really kind of expecting things to start slowing down and start seeing the monkeys in Washington D.C. using that as cover to start doing what we're seeing now.
Yeah. That certainly isn't going to help, Rory. No doubt about it.
Well,
and what in the Fed, in this kind of competitive devaluation business, everybody thinks, oh, the Fed's printed their $3 trillion and they're done. No, they see what's going on in the euro and they see what's going on in the yen, and they're Keynesians too. So they're going to look at that and go, well, now we have to continue to devalue. It's the whole currency wars thing. We can't have the dollar on because that'll hurt our economy and all that kind of jazz. And so the Fed's not done either. And again, all of that just augurs why you have to have physical gold and silver in your possession as protection.
Yes. And I want to change gears just a little bit here, and this ties in with everything that we've discussed so far. And Russia, I'm sure you're well aware, they're getting ready to launch in May their alternative to the SWIFT system. And what impact is that going to have as far as what we're actually seeing right now? In your opinion?
This is all a really big deal, and I have been following this at TFMetals report for a year, really since the Maidan protests that began almost exactly a year ago. This has been a real big theme at my site because we have why the U.S. and the West is trying to provoke and poke Russia. Again, maybe that's a whole other topic for another day. But the fallacy, the mistake that has been made is that the U.S. leaders, if you want to call them that, I think so much the American leadership is naive and frankly just unexperienced. They just don't know what they're doing, and they plod along as if tomorrow will always be like yesterday. That the U.S. is this sole hegemon superpower that can do anything it wants, and everybody has to take a knee and bow before it. And in this situation, nothing could be further from the truth. I've maintained since last February that the Russians, and by extension the Chinese, hold all the cards. They could just decide to take their ball and go home at any time, but yet we keep pushing and pushing as if we're the ones that are going to dictate how this all ends. Why we'd want to shove Russia away from the West and into the willing arms of the Chinese, I have no idea, but this has definitely exacerbated that. You got the huge gas deal that was signed after years of negotiation. And just look at the membership and the goals of the Shanghai Cooperation Organization, and you can see where it's headed. And that is going to be the basis of the new financial monetary paradigm of the 21st century. And so few people can comprehend that because, again, their reference, their time frame that they understand is just simply what has happened in their own lives. They can't even imagine a time where the U.S. isn't a superpower and the dollar isn't the reserve currency because they've not lived in a time when it wasn't. But that's where we're headed to, and that's what makes it so difficult for these shills and these apologists and goons that you see in the financial press or on Bloomberg TV or whatever to even begin to understand where this is all headed. You mentioned the Swiss system and the testing that they're doing, or all of the currency swap facilities that the Chinese are setting up with. Right. I mean, all of this is headed in that direction. And when it all finally shakes itself out over the next years or decade or whatever it is, everybody will sit back and go, "Oh God, how come we didn't see that coming?" Because all the signs are there. And again, all an individual can do, you, I, everybody listening to us, is just be alert, be situationally aware, and take matters into their own hands. If you sense that what you and I, if the listener senses what you and I have been talking about is correct, then don't sit there and listen to what some dumb stockbroker or some money magazine has to say. Act on your own instincts. Trust your own intuition and trust your own gut. And your best protection against all of this is physical gold and silver. And if you have to ask yourself whether or not you have enough, you probably don't. So buy some more.
Yes, definitely acquire as much as you can, as quickly as you can, because if you don't, it's all going to evaporate right before your very eyes.
While you can. A lot of folks sit there and they read this nonsense from some of these snake oil salesmen about gold going to 500 and stuff. And they think, well, I'm just going to wait. And I'll buy some when it goes down to 800. Look, man, even if you wait, you'll get gold that you won't be able to get gold, I guess is what I'm going to say, because everybody and their brother is going to be showing up trying to lay claims to the ounce that you think you are going to own.
Right.
The time to be accumulating and stacking is now, while you still can. I've told people on my site countless times in the last couple of weeks, the paper price may be down, that if you wanted to actually sell it and convert it back into Federal Reserve notes, which would be the stupidest thing you could ever do, but if you wanted to, the price is down. However, that metal has never been more valuable than it is right now. And so again, now, no time like the present. And as I said, if you've got to ask yourself if you have enough, then you likely don't.
Well, there is no, at my house, there's no such thing as enough.
It's a good policy, Roy.
Well, and we'll get into it another day, but my wife and I have a very sweet deal worked out, and it's pretty cool. So we constantly acquire. So, and I would encourage everyone to do that.
I have a good deal with my wife too. She says jump, and I say how high.
Well, that's the given.
Yeah, exactly.
Oh, well, Turd, is there anything that we should leave the folks with other than what we've shared with them so far?
Well, I'm going to throw out a shameless plug. I think my site, I mean, this is a selfish thing to say, but I think I've got the best precious metal site anybody can find in terms of just the quality of the community. And it's free for everybody, TFMetalsReport.com. If you want to go in depth and get a podcast every day and get all of my exclusive stuff, it's a whopping $10 a month to help me pay the bills. I would encourage everybody listening, if you think you're out there alone, you're not. There are a lot of folks out there that feel the same way as you and I and Rory. Come to the site and check it out. I think you'll be happy with it. Again, TFMetalsReport.com.
Yeah, and the forum that you've built into that community is really incredible.
Thank you.
And it's I've learned so much just hanging out over there. I can't even begin to tell you. And once again, it is free, and I certainly appreciate everything that you do, Craig. I think that the work that you do is incredible. It is a value add to the community in a big way. And when you share articles with the community, like Complete Collapse, that is, folks, you've got to take advantage of this. You've got to be educated. And the Shanghai Cooperation Organization, you will never, up to this point, there has not been a single word about what's going on with that in the mainstream media in any form. The only place that you can learn about what's going on with the Shanghai Cooperation Organization is at sites like TFMetalsReport.com, thedailycoin.org, sgtreport.com, Zero Hedge. I mean, there's not a whole lot of coverage even in the alternative media. There's really not. And it's kind of a shame because this is a massive, massive situation that is going to blow everything out of the water that is currently happening. The Shanghai Cooperation Organization is going to encompass somewhere north of 60% of the global natural resources. It is going to encompass north of 50% of the global population.
Mm-hmm.
And if you are not paying attention to little countries like Vietnam and Laos and Uzbekistan and all of these other stand countries that are on Belarus that are all buying gold by the truckload, why are they doing that? Why are they doing that, Turd?
They're getting prepared for that new paradigm that we talked about. And they're basically taking matters into their own hands, just like everybody listening should be doing the same.
I mean, am I off base here with the importance of the Shanghai Cooperation Organization?
No, not at all. And as you said, not only do the countries that make up the organization control the majority of the world's natural resources, they also control about half of the population. So that is going to be the seat of power in the 21st century. Does that mean it's going to be the seat of power next week? Probably not. But in our lifetime, that's the transition that we're going to witness. And that's the world that our children and grandchildren are going to live in.
I think that we're definitely going to see it in our lifetime. And
Mm-hmm.
there's no question about that. Do you think this is the last that I want to ask you about, but I feel this is important. Do you think that the BRICS are going to be the central government for the Shanghai Cooperation Organization?
It's almost kind of, in a way, it's like mixing metaphors. We're talking about the same thing in different languages, in a sense. And the Brazil, Russia, India, China, well, all right, that's the RIC, the RIC is part of the Shanghai Cooperation Organization, Russia, India, China.
Yes.
So, I mean, in a sense, we're talking about the same thing. I would draw it a different way. I would just say that the creditor nations, the nations that have become creditors in this current debt-based system, they are the ones that are going to set the rules, and they will make these changes. If it's to happen orderly, they will make these changes at a time of their choosing. And that's why it's so silly to be pushing Russia into this corner over some fabricated controversy like what took place in Ukraine a year ago. But anyway, this will happen. This is the direction that things are going. The creditor nations will set the rules, and they will be the ones that are be in charge in the 21st century. But whether that's an orderly process, a lot of times the transition from one reserve currency to another takes place because of or after some major war. Let's just hope that that's not the case this time, though. Again, that would be contrary to how it's worked in the past.
Yeah.
I don't expect it to be an orderly transition, but if it were, those countries will decide where and when they want to make those changes, and then we'll all have to deal with the consequences.
Well, we've been speaking with Craig Hemke, founder of TFMetalsReport.com. Craig, once again, I really, truly appreciate all your time this afternoon.
Rory, it's my pleasure. Do it again anytime you'd like.
Well, we'll do it again pretty soon, and we'll get on the. I want to come back to you about the Shanghai Cooperation Organization, so because that's huge. So,
yep.
But I know you're busy. Go get to it, and I will talk with you soon, my friend.
Thanks, Rory.
Thank you. Bye-bye.